All right, hey everyone. I'm doing a halfway transparent thing here. I'm trying it out because I was fucking bored and I wanted to. Um, so let's talk about stop losses. Here's the problem. If you've ever tried to make a trading robot, you've probably figured out, the entry's easy. It's the stop that is where you get messed up on. And then so you can sit there and say, well, I'll just increase my stop, I'll do this, I'll do that. And you put a bunch of work into coding it, and what happens? It doesn't work. Why doesn't it work? The same reason any mechanical system doesn't work, and that is that they do work, but there's certain things you need to, consider. At the end of the day, there's never going to be a perfect entry. Let's go ahead and pause this. I do have a pause button somewhere, don't I? Got to stretch it out a little bit. Um, this is on a pound yen 1 minute chart, and I'm just going over one of the indicators that I made, um, deciding if I want to do a robot out of it. But anyway, and technically, I guess it is a robot. It's an expert advisor, but it just sends out a sound alert and draws an arrow. It doesn't actually open any trades. So the thing about stop loss, there's no such thing as a purely mechanical system that works. Why? Because more often than not, your stop is going to get hit. If you're using any kind of reasonable stop, it's probably going to get hit. Why is that? Because if you try to use any kind of static condition within a fluid or dynamic market or dynamic any kind of environment, it ain't gonna work, man. It just doesn't. Um, so what we need to do here, we have these little arrows. Now I'm not going to sit there and try to sell you on the benefits of my indicator, because guess what? I don't sell it and I don't give it away. There's three people I've given it to, but you probably ain't one of them. Um, so basically, this thing says, okay, it's going up. Okay, now it's going down. And what you need to do is if you take these signals right when it gives them to you, half of them will do okay, half of them will lose. The thing is, what you need to understand is it's telling you direction, and at that point you still have to make a decision. You can't just let the robot or the code do it for you. Then here on a 1 minute chart, I'm going to say if our stop loss, and if it's anywhere above about 9 or 10 pips, I'm not getting in there. I'm going to wait till at least half of the move, a 50% retracement basically. Now, if on the other hand we get, let me find a place where it did it. If we get an up signal or a down signal, I'll go ahead and use this one right here. I think, yeah, fuck, it's close enough. If we get there in my stop loss, I don't know exactly where my stop loss is, but I know the minimum it can be is above this pin bar, above this support area or resistance area. So since that is less than 10, yeah, we can go ahead and get in it. We get paid just fine. If on the other hand we have something like this and it's down there, it's right on the line, but it's around 11 or 12, and then our stop is actually somewhere down here probably. So yeah, let's go back to 50% of it, and it gets in. It still loses, but we lost a lot less. Basically, what you need to do in order to make these to make the math work out, you need to basically always be risking roughly the same amount, and keep your risk fairly small and keep your reward pretty good. I'm not saying go for 2 to 1 or anything like that, but I'm saying manage your risk, keep it small. Um, In this case, let's see. We got there, boom, boom, boom. We could say it's either there or there. Either way, you could wait for 50% of it, and it still went against you. It never hit your 10 pips. Went your way quite a ways eventually. But the whole idea here is once we've gotten a signal, well, how far is it to our stop? And a lot of people will tell you, well, if it's 15 pips or 20 pips, then you should do a 30 or 40, go for a 2-to-1. That's fucking stupid. That's some bullshit that you read on the forums and all the little retail sites for people who don't know how to make money. Because guess what? The math don't work. Generally, price is going to stay within a range. Yes, it may be in a downtrend or an uptrend, but it's going to bounce around in a range. If your range is roughly 15 to 20 pips and you're going for a 40 pip score and you didn't even get in, say you sold it, but you didn't sell it at the top, you sold it somewhere in this, say 60%, so 50% of this range right here, maybe 50% somewhere around here, and maybe you sold it right here. The whole thing's only 20 pips and you're trying to go for 40. You're trying to go for more pips than the entire range consists of. I mean, is there a chance that it'll break through? Sure. But I mean, right here, the range, your trading range at this point is roughly about 17 pips. So if you're going for 20 or 25 pips, you're fucking stupid. Don't try to go for more than there. It's like you go up to I don't know, you go up to a market or something like that, and someone has, something that they're selling. Let's just say they're selling, I don't know, fruit, and they have pineapples or something, and you're sitting there, they have 6 pineapples on the table, and you're trying to buy fucking 10. The 10 aren't there. There's only 6 there, but you're trying to go for more than what's even there in the first place. It's stupid. Now, if you're basically an institutional player and you have an idea or the influence to make it shoot up 100 pips, hey, cool. But if you're a retail trader and you don't, you're trying to go for more profit than is even on the table to begin with. Delusional much? Stop lying to yourself, people. If you get a signal, whether it's a MACD, a moving average, whatever, how far is your stop loss? And then, what is your range? If your stop loss is greater than your range, or at least greater than like 50% of it, it's kind of insane to think that you're going to get all of it. The markets range most of the time. Yes, even if they're in an uptrend or a downtrend, they still are pretty rangy, especially once you get up on like 15-minute, half hour and stuff. And so your 5-minute charts are going to bounce around a lot, bouncing off the support and resistance of those higher time frames. So don't go for more that's out there. And if you see that your stop loss is really more than your range, to where if you were going for 1-to-1 or 2-to-1 risk reward, if that amount of pips that you have to get is larger than the whole range, good luck. Wait for a better price. Make it so that you're always risking the same amount. And the thing is, if you do that, say if you're always risking 8 pips or 12 pips, or whatever it is, it could be 100 pips depending on what time frame you're trading. But here down on the 1 minute, man, we're not going over 10 pips. Make it so that you're only risking about 8 or 9. See where your stop roughly about where it should be, and put your entry somewhere closer to that, so that your risk is always going to be under control. The binary options, they love saying how it's managed risk and you always know exactly what you're putting up. So I guess on one hand that's true, but guess what? You don't need binary options for that. You can just say, oh, I got a signal here. Well, the bottom is here, so You know, if my signal's here, well, that's more than 10 pips. The whole range so far is only 20. So even if I got in at 50%, I might get 8 or 9. But at that point, I'm risking 9, 10, 12, 13 pips. No, man. If your whole range is 20 pips, man, you shouldn't be risking more than about 5 or 6 pips. So get in down here somewhere. Boom, it hits, and you get paid. Now, of course, on the 1 minute, that's not you're not going to cash in a bunch of huge paydays. But I don't think that I have this. I do have it on there, but I've changed the time frame, and so it resets. So I got to wait for the Sunday evening market to go. You know, basically the Asia session to fill it in. So that's why I'm using the strategy tester um, to kind of put these up. So here we got a signal. Well, it's about 20 pips away. Well, we got our signal. Well, our whole range is only 21 pips, and our stop loss is 20 pips away. That doesn't work. Get it down to about 5, 6, 10, somewhere in there. You know, you got your signal there. Put it there so your stop loss is only 5, 8, 9, 10 pips. Boom, you hit it. You fill. It does make a new low, and you get paid just fine. Here's the thing, though. Even if it didn't make a new low, even if it stayed within its range, you still would have got paid because you're working the numbers. You're working the math on it. Like say, at this point, I've been in a few groups. I've actually left I think one or two of them I got booted out of, and all the rest I just left, except for ones that I run on the Facebook groups, because and I wasn't talking trash to people or anything like that, but I had nothing to offer because I'm like, you guys are fucking retarded. If you can't see simple things, you know, like you just have no business doing this, and if you're gonna lie to yourself, there's nothing I can do for you. So yeah, you got a down signal here. No matter what you do, this is going to be a loser. But get in. I mean, your whole range is only 7 pips. So one, you shouldn't even be getting into this trade. But if so, you should only be risking 1 or 2 pips. And if you did happen to get filled on it, try to be out at about 4 or 5. But then we get here, boom. Well, where's our range? Well, it's about 7. You know, our stop loss is about 7 away. We actually could say it was up there. Still not the greatest one to get into, but if you waited for about 50% of the move, you know, it worked out good. But the big thing is you get that signal, you're like, wow, man, if I would have got in there, I would have done great. Well, guess what? In hindsight, that always is the case. It always looks great, but you can't get into this trade. It's at the top of the range. It never made a retracement. Your stop loss was way down here. You can't expect that it's going to go much further than this. Now, this one, on the other hand, once it did break through, yeah, absolutely. You could wait for 50% of that, and the math still worked out, just barely, but it did. So, yeah, that's sort of the moral of this video, is just watch your stop loss. You know where it's going to be, and or figure out where it should be, and then you'll have an idea how big your range is and whether or not you should even get into it. Should you get into it right when you get the signal, or should you get in up here? Because there's a lot of times when you get a signal like this and it just goes and it never comes back. And you're like, oh man, I really missed out. And a lot of times that happens on the big moves. More often than not, it signaled you long before that. If you understand how to look for rejection and don't rely completely on indicators, that's pretty much almost never going to be an issue. If you don't, good luck. I don't know what to tell you. What I can tell you right now is manage your risk. So here we know our stop is somewhere around here, the top of our range. That's about a 50 pip range. So if we waited for 50%, 25, yeah, we could still get 20 pips out of that. So you could try it, and it actually got a lot more. but at least the math worked out if you waited for it to come down here. And that's basically all you got to do, because you never know when you're going to get a down signal like that and it's going up. You're just going to get screwed on that. But if you keep in mind how large your range is and where your stop loss is, and you get in very close to your stop loss, even if it only goes a portion of the range, you're still going to get paid. If it does go against you, you're only going to lose a little bit, and that's how you get ahead. You cash in the pips when you can, and when you do have a loser, you just get out of it at a small loss, not a big loss, a small loss. And um, generally you will make more pips than you lose, because you just don't, especially if you understand how reversals work and how accumulation and distribution works. You're not going to have that many losers. And generally, if you do have a loser, like you notice here, all of in this up move here, all of my down signals were losers, but then right after, a few candles after, we got up signals that just hella paid you. So almost any system that you're going to use, as long as you can back it up on the past charts to say, you know what, this works most of the time. If you manage your risk, any one of those systems, I don't care if it's an oscillator, a moving average, phases of the moon, fucking, it just doesn't matter. If it statistically wins 50-60% of the time and you manage your risk, even on your losers, you'll probably get out at break even or just a few pips profit, and you're going to be just fine. Anyway, that's your freebie for the week. See you guys. Get paid. Hail Satan.